Hello everyone, we are here at the Stitch e-commerce Elevate event, and now I have Judy with me. Judy, welcome.
Hello, nice to be here.
You representing Invenfin, which is a division of Remgro, if I'm correct?
Yeah, we're the VC arm of Remgro. We're a lot closer to Remgro now, so more later stage investment, but for the last 15 years, we've been the venture capital arm. Yeah.
Amazing, and I want to thank you for your time. And I'm going to ask you some uncomfortable questions.
That's fine. Let's go.
Let's just start with the origin story. Like, I think the last time we chatted, you spoke about Remgro and Invenfin and the main focus of Invenfin. Maybe we can just start there and give people an idea of what you guys do.
Yeah, so we Invenfin has a tech arm and a consumer arm. So we've got 17 investments. We're a lot closer to Remgro now, who is the big institutional investor in consumer and banking and fintech and so on. So there's the big brother, as it were. But I'm part of the consumer team, running the Invenfin consumer, the venture capital investments, as well as being influential in some of the Remgro consumer spaces, which is like Heineken and RCL brands like Oma Rusks and Nola. And those kind of things. So it's vast and very different.
Amazing. And there's actually two companies here that you guys have invested in recently.
Yeah.
Maybe tell us a little bit more about that.
Yeah, Invenfin, very proud of Fieldbar, who's here, and Lelive, the skincare brand, that are here. Both e-commerce, very strong in e-commerce. I think post-COVID, we as a consumer team looked at D2C unit economics, what kind of brands are resonating, who will grow. And for Invenfin, it's really important that we come in at a point of inflection where that brand either wants to jump geography and is relevant in a category and can become big, and we fund that, or where they've got a point of inflection where they're going to change from e-commerce and go omni-channel or something like that. So when they need some real growth capital.
I would love to get your perspective on the Fieldbar deal.
Yes.
And you don't have to share too much, but I'm curious to what you saw in the business, or what you guys saw in the business, and what the actual big picture looks like.
So when we started looking at Fieldbar, it was very against the grain for us. And so obviously the group's also got heritage in Remgro, which is luxury brands. And this was affordable luxury, very disruptive in the cooler box category. It's not... People who buy it don't think they need a cooler box. They just want a Fieldbar. So it has this stickiness to it that's we didn't really understand in the beginning, but getting deep into the story, understanding the passion of the founder, Lee Hartman, and really getting to know what he sees outdoor luxury, this Africa safari story, and how it can be seen in a product and be seen in a movement.
And it's also like a fashion appeal to it as well.
Absolutely, yeah.
So there's definitely like a strong, unique selling point behind it.
Yeah, so we got it early because we knew that this strong unit economics. And
how early, if I may ask?
So they were second year of being a company and actually producing. So that's really early for us. And we've been the first outside investor in strong founding team and strong early founders in the space. And then we were the first outside investor to come in.
Also sound like they had a clear direction of where they wanted to go, which is super crucial.
Yeah. And look, that has evolved over time, but become a lot richer.
Sure.
As they've found their marketing message, their branding, as they hone and make it more interesting. So the product spectrum opens up and innovation opens up. So we love that kind of thing.
And Lelive?
So Lelive, yes. We also decided that M&A activity in skincare was going through the roof. And we needed to see something. And we also found that African provenance and African botanics and all of that was starting to trend, and skincare was where it would land. So we actually looked at 18 different brands.
Wow.
And the reason we looked at we obviously found that Lelive ticked all the boxes for product, brand, aesthetics, but people. There's 4 founders in there that are just digital natives. They are passionate people, Duracell bunnies. They will go through the window if the door's closed. And we went there for the team. Because they are that team.
Yeah, and it's such a beautiful brand.
Yes, yeah.
So for those watching and listening, I think there's a lot of business owners paying attention to what we're saying, and a lot of them probably aspire to one day either build something that is valuable or potentially get people on board to help them grow further.
Yeah.
they most likely have questions in the back of their head like, what do you guys or people like you look like, investors like you, what do you pay attention to when it comes to businesses, and what is the ideal business that you guys would like to invest in essentially?
Okay, so I'm going to talk from the consumer brand space because that's the area that I know well. So we look for brands that are disruptive in a category. A category must be trending and be relevant for a long time. So there must be space in the category.
Historically speaking.
Exactly. And then it also must be relevant. So whatever comes out of the South African context must be relevant globally. So can they sit on a global stage? Is there space for them? It doesn't have to be international, but a few markets will do. So, and then have they proven brand, product, market fit, but consumer adoption in this country? So are they commercially viable in this country? They don't have to be profitable, but is there some traction? Yeah. Then what is the plan? Are they planning to, do they need money to go bigger? And can they do it? That's the big thing. Can the team do it? We are not operational within it, but we will support in building team, in hiring, and bringing in, service providers and so on. We'll help them with that, but we don't get involved in the business. So they need to have the muscle to do it, and they want to do it.
And there's probably a lot of applications or opportunities that comes across the desks.
Tons.
And a lot of them are probably just not things that suit your appetite for risk, or it's probably businesses that are not ready for certain levels of investment. So I think my question is, what are some of the red flags that you guys do see in businesses that makes you go, no, thank you?
So there's some brands that we really love, but the founder is not coachable or wanting to exit. They do say they want investment, but you can see that there's not going to be that exit event, and that you have to feel that out quite quickly. Because when you take on investment, you are preparing for an exit. That's how it goes. So they've got to have that mindset. They want to build something that they want to make money out of and maybe move on. Not that they need to be serial entrepreneurs, but there mustn't be a family of 7 kids that must inherit this thing.
I want to pause on that for a second and reflect, because you said if you take investment, you're going to have to be ready for an exit. A lot of people don't know why that is. They were like, well, why not? Why can't we make profits together? But it's most likely because most of the money gets made on the exit.
Yeah, exactly. So dividends are great, but an exit's much better. So we prefer, and also taking on investors alongside us that can bring other elements of growth. And that's the ecosystem that we like, especially in a consumer brand space, because as they grow, there's so much more they need. And we're quite good at getting the base right and getting all the legals in place, the trademarks in place, finding your jurisdictions where you want to go to, building strategy. But there may be others that come in with other things that this growing business or even the entrepreneur needs, or, team and so on. So we like bringing other investors alongside us. Yeah.
Amazing. And I think from a unit economics standpoint, what makes some of these businesses attractive and makes you go, yeah, this is going to make sense?
It's got to have the demand side sorted. So the team need to know how they're going to build this in another geography, how they're going to do how they're going to cost this, how they're going to get it there. So everything that's applicable here at this conference today means that they need to stack this thing up. So for us, can it be relevant at the right price point in another market, and can it get there and have time to bed down and seed? How is the money going to be? Are we going to spend ahead of revenue to seed? How much are we going to do that? And how much do we need to do that? And then once that is done, can it generate its own marketing money, its own? So there's a lot of thought that goes into that process, because we are going to put the money in to jumpstart the thing, but it's got to take care of itself.
I also think a lot of founders underestimate the responsibility they take on when they take investment.
Yeah.
Like, how do you have conversations? I mean, for people who maybe, walk around and ask just general advice.
Yeah.
Is there any perspectives you would want to share with them around taking an investment? Because sometimes it's not the best thing to do either.
Yeah.
The business is not ready for it. Like, maybe there's a perspective or two that you can share for those listening.
So I think in our DD process, we are very thorough and we take our time with that. And I think I remember Lee Hartman at Fieldbar saying, "What have I done?" But
I'm experiencing that right now. So there's literally a business that we own that's under due diligence, and we experiencing the exact same situation.
Yeah. So we paint a picture that is what we would expect you to see, what we would expect to see in the due diligence process. And by putting together sort of a 6 month or a year plan to say, let's get this business into a space where it is solid. And these are the things you need to do. So you need money to do this. You need expertise to do this. So we put the real picture out there, and then we start sitting around the same campfire to solve for that. And that's when you know you're in the right space. If someone can, steps up.
A lot of investors I speak to say that they don't want to exit without the founders and they want to exit together. Is that something that you believe in, and why?
So we want to keep the founder in the majority in the space so that they stay committed. As I said, we don't, unless there's something critical that happens, we don't step in to actually run the business. So they need to be there. We will help them build team and so on. And they often take slightly lower salaries, or they put a lot more in, or they're working, 24/7. We'll support them, but we also want them to exit with us at a big multiple. So we try and sort of carve that route with them, and always talking about what is the market saying, what is the market looking at, where should your margins be, when do you take on a strategic partner that may be your exit? So those are all conversations we're having with them all the time. So they need to be there.
A lot of founders I speak to that has, for example, a business that's a year or 2 or 3 old, a lot of them overvalue their businesses completely. And it comes from the romantic side of things and the buyer side of things, where you've put in all this effort into building something that you feel is extremely valuable, but sometimes the balance sheet says differently. Like, how do you have those conversations?
Upfront and soon.
Yeah.
So we, and also if you can if there are either investors in already, or if you have some peer set that you can work with, you'll easily get to the right number.
All evaluations are essentially different, and there's infinite amount of ways to put a valuation on a business.
Yeah.
Is there like a simple framework that you can share that you think is the most common in your area?
No, we actually meet them where they're at and see how the industry is working. We have a corporate finance team within Remgro that helps us a lot with that. So they will do peer set reviews. They will do multiples that are exiting in certain spaces. They will look at risk in the business, and so help us in that way. So, and even the businesses that we are currently invested in, we do valuations on them every 6 months and give them, these are the risk profiles we see in your business. This is why we're taking the valuation down slightly, and so on. So it's a constant conversation.
I always say to people that your multiple is directly associated with risk.
Yeah.
Is that a safe assumption to make?
Exactly.
It's the easiest way to explain it to someone.
External and internal.
Yes.
Yeah.
And the more you can reduce the risk, internal and external, the higher the multiple will be.
That's it. Yeah. And we're very happy to have the conversation openly with them. But we have monitors all the time in that space. So
there might be some people watching, listening, going, but what kind of risks? And one risk would be that the business is solely dependent on you.
yeah.
Can you maybe give some other ideas of risk?
Yeah, so we do. That is a big one. I mean, it could also be supply. Do you only have small businesses usually only have one manufacturer or one supplier or one space, or so it's if they're in other markets, it's the rand or the dollar, or it's so much that can actually be. And so, how are you hedging? How are you doing? How are you mitigating in all parts of the business, really? Sometimes when they go international, they go only into one retailer, and then that retailer wants exclusivity for a period of time. And if that falls flat, then you're stuck, so.
And it's almost like there's infinite amount of risks out there.
Yeah.
That you probably can't control, but it's your job as the founder to try and have foresight and mitigate that risk as much as possible for those joining the company.
It's an ongoing conversation. It's just an open conversation. So we challenge a lot. And then ask, can we look at this? Can we look at that? Yeah.
And looking at, you speak about you looking specifically for brands who can dominate local but essentially expand global.
Yeah.
That's just because obviously the global markets are so much bigger than the South African market, I assume.
So also we're focusing more on the premium market, or that slight affordable luxury space. And you're going to hit a ceiling when you get to that. And you don't want to discount your product or bring it into any place where you've got commodity status around it, because it's a very different place and we're not in that. So once you've proven, and we've got quite a complex premium market in this country, and there are a lot of things you can test here. And once you've gone through that, you actually can find a similar market internationally. And who doesn't want to exit in pounds or dollars?
No, of course.
Yeah.
And do you believe in your heart that there's a glass ceiling for South African brands that only stay local?
No, I think they can. I think especially with e-commerce and connecting with tribes and customers, if you're not only in one channel and you diversify your channels, you'll find a whole lot more. And also, you can segment your brand to premium, to more accessible, and to wherever, as long as you keep those conversations where they need to be. So in the food and beverage industry, we've found Amajoya, one of our sweet brands, actually plays in wholesale and in modern retail very well, and is now coming into Dubai, which is great. And that market loves the premium side of it. So it's one brand, just different products within it.
And just, I mean, you're not affiliated with Stitch, but the brands that you guys have invested in, you've actually put in touch with Stitch. Maybe just explain why.
There is a little backstory. My son does work at Stitch, so I do understand
Sure, okay.
I understand them very well. But
We'll cut that part out.
Yeah.
No, I'm joking.
I've had a lot of interaction with them. I've also sat with our brands and some of the service providers there are with, and equally with Stitch, and seen that sort of light go on to say, okay, this is something we could do. It's seamless. It seems to be a lot more that we're in touch with. We like the solutions they're bringing. And as one brand loves it, I'm going to introduce the next and introduce the next, so on. So it's just, yeah.
I mean, I've had 4 conversations today already, and every single one of them that touched on Stitch said the moment they implemented Stitch on their online store, it made a difference.
Yeah.
Have you guys seen that on the Fieldbar side at all? And Lelive perhaps?
Lelive, definitely, yes. I think Fieldbar, yes, too, also. But they've also, I think Fieldbar, especially in the multi-geography. So, because they're in 4 different countries now, and that's really working for them. That Shopify integration, made it simpler.
Yeah, 100%. I think I was speaking to Mike from Lighthouse. He said they had a 10% uptake. I mean, and Sentimental, one of the brands that we own, we had a huge uptake. I think we did 100,000 Rand in like the first few days.
Yeah.
And essentially, it's just all about convenience to the consumer at the end of the day.
Yeah, that is it.
People underestimate, if you can make the checkout process more convenient, you'll essentially have higher conversions.
Seamless and trust.
100%.
Yeah.
Now, I'm assuming you talk to a lot of business owners. It seems like you've got a passion for business.
Yeah.
Is that a safe assumption to make?
Yeah, definitely.
With that said, like if you had to sit across the table from a new business owner who's now 6 months into his journey, he's doing hypothetically, 100K a month, and he's looking for advice, what would some top shelf advice be for an individual like that? What should they be focusing on over the next 6 to 12 months?
So the first thing for them is, so a lot of times the decisions you make to grow are so important. So keeping control of your growth, especially in the beginning, until you take on investment, or so that you're not tanking in any.
Define keeping control of your growth.
So not going. So a lot of times you'll find a beverage brand, for instance, they start seeding in on-premise, so bars and restaurants. Then they get into sort of independent retail, and they're starting to do quite well. And then suddenly they get a retailer listing, and that just sucks cash. And they're not getting the same margins they were. And suddenly they've got to buy inventory, and they've got to do that. And the working cap just goes, and they think, oh, sherbet. So they don't plan for that well.
Because every opportunity looks like a good opportunity.
Exactly.
Every opportunity to sell more product is a great opportunity for the business owner, right?
Yeah, so it's all about negotiation. So if you're going to go into retail like that, then just negotiate with the retailer. They want your product, but say, can I go regionally? Can I do this? Can I do that? Work with me to get to where I need to be. They all think that, there's a listing. I've got to put everything in this thing. Yeah. So it's that big growth inflection that just brings stress to everyone.
The wrong growth costs a lot of money.
Exactly. Yeah. So if you can control it more and be in charge of your own destiny. Also, retailers, they want everything from you. So just give them a little bit, and then just make a moat around yourself so that you become a little more sticky
With that,
in that way. Yeah.
Is there any other golden nuggets before we close off?
No, I just think there's so much There's so much interest in brand and interest in consumer, and e-commerce and social media marketing bring those two so much closer together. So it's not a long supply chain. It's actually brand and customer in a circle, and they keep on talking to one another.
Feedback loop.
And that feedback loop, you've got to take that into account. What you're making, how you're pricing, what you look like, how you're talking about your brand, what does your comms look like. Keep it in the feedback loop all the time.
Judy,
Yeah.
it was such a pleasure chatting to you today. Thank you so much for all the insight and wisdom. I wish you guys nothing but success. And yeah, thanks again for joining.
Thank you.
Thanks, everybody.
Good.